Alrighty, welcome back, everyone. So we just got done with our financial outlook meetup that we do every 2 weeks, and that meetup is always focused on how I see the next 2 weeks going to look like, or general trends in our economy, in the financial world. I try to keep track of all the latest headlines and how I interpret those, and then I share that information with you guys. So that meeting happens every couple of weeks. So in that meeting, we talk a little bit about this new FinCEN requirement, where if you are an owner of LLC or S corp or C corp, like you own any kind of company basically or corporation, then you have this requirement to let the FinCEN, which is a sister branch of IRS, let them know who is the beneficial owner of that company. And I didn't want to take too much time in that meeting because not everybody owns a company. I think this is a better subject for our small business advisory group. And we do that meeting every 2 weeks as well. But I wanted to kind of go over some of the details because there are some technicalities and it has serious consequences. So I thought maybe separate sessions. So all of you guys who are on this session are a business owner. So please feel free to interact with each other and ask questions. So and by the way, I'm going to go ahead and post this on YouTube and Facebook and other places because I think this is going to be beneficial to everyone. But if you are watching us on YouTube or Facebook or anywhere else that you might find this video and you want to join my small business advisory group, maybe you have a side hustle or a small business and you want to learn how to grow your business. You want to learn marketing. You want to learn sales. You want to learn finance. You want to learn operations. That's what we discuss in that meeting. So it's a great opportunity for you guys to learn about how to grow your business. So if you want to join that, please head over to taxcodeadvisors.com and you can submit an inquiry there and we'll get back to you and give you the link to join the meeting. And those of you guys who want to improve your financial education, you want to understand, all this data that is coming through news and media every single day at you, and you want to make some sense out of it to see what's happening, or for that matter, maybe even just save some time, right? I mean, why spend your time if you can use my time? I'm already spending it, might as well leverage it. So, that's one of the things we do here at Tax Code Advisors. We want to act like your filter. We want to deliver a lot of value to you. So please, if you would like to take advantage of that, then you're welcome to join that call as well. Going back to this Corporate Transparency Act. So let's focus on that here. Now, this act, why does it exist in the first place? What was the need of it? Why do even the government care? So the act was created to combat illegal activities such as money laundering, human trafficking, terrorism. All of that has been facilitated through anonymous LLCs and corporations. People create shell company after shell company. You set up a company that owns another company that owns another company, and they're moving the money around. So they're doing a lot of money laundering and all that kind of good stuff. That was a really big problem for the government. Like, okay, how do we really figure out this mess? How do we tie all these dots together? I mean, we are, after all, the world's largest economy. People from all over the world are investing in the United States. People living in different countries, they own companies here, and they're investing here as well. So most of them are legit, most of them are good, but there are some bad apples causing problem for everyone. I guess good analogy I can give you is if you're going through an airport and they say, "Hey, look, let me check you out." Well, you're not a terrorist, but they still check you out because there is a terrorist somewhere, and they are the reason that we have to go through that security. So similarly, for businesses, we have to do business with businesses, and businesses needs to be in compliance with this act, so that way the bad apples can be identified. I'm sure they will figure out more ways to hide, but this will definitely make it harder for them. Okay. Now, this act requires those who own, control, or form most corporation and LLCs in the United States to report identifying information to FinCEN. So those of you guys who don't know FinCEN, if many of you who are watching this is probably our clients already. So FinCEN that's where you file your FBAR. It's the same organization. It's a sister branch of IRS. I guess the full form is Financial Crimes Enforcement Network. So as you can tell from the name, their job is to kind of find criminal activities. Now, it is crucial because it affects every owner of a US company. I mean, I guess I shouldn't really say every owner. There are some exceptions, but for most practical purposes, for most of my clients, they have to file it, you know. So let's start with the basics and then I'll build my case on it. So reporting requirement for existing entities. So if you already have a company in existence as of last year, so there we can divide this into three different groups. Okay, those who set up before 2020, those currently in existence, and those to be set up this year. Existing entities needs to submit the initial report, which is as business owner information, BOI, business owner information. That report needs to be submitted, obviously, to the FinCEN. Okay, so if you already have a company as of last year, then you have till the end of this year to go ahead and file that report. If you're building a new company this year, maybe you already did it, or you're planning on setting up a corporation this year or a company this year, an LLC, maybe buying a real estate or moving something in real estate. You're doing any of those activities, then once again, you need to file it within 90 days, within 3 months. If you are going to make any change in your company, maybe you have a new beneficiary of your corporation, remember the key word here is beneficiary. They don't necessarily have to be owner. They could be a beneficiary of your corporation. And then if a new beneficiary is there, then you need to once again include them in the report and file it with FinCEN within 90 days. So it's crucial that you do that. Now, if you don't do that, then there are penalties, and just to clarify, those penalties are not like tax. So it's not like, well, it's based on your revenue or profit or anything like that. It's a penalty for not filing. So if you didn't file, they don't care whether you have a zero revenue, okay, or you have $100 million revenue. Well, I guess if you have $100 million, there's an exception. You don't have to file it. So take that back. So let me make it a little bit more easier. Whether you have a zero revenue or 4.5 billion revenue, let's just say, you still got to file it. There's no discount for somebody who has less revenue. That's what I'm trying to say. How much is the fine? Well, it's $500 a day, up to $10,000, and they can also give you 2 years of imprisonment if you don't file the report. So they are serious about that. And if you're doing it to hide something illegal, I mean, this act obviously exists to penalize people who are trying to build these shell companies and do money laundering and do some fake transactions or moving funds from one company to other to take advantage of tax codes. It's there to catch all those people. So if they catch you, if you're one of those who's doing that, obviously none of my customers do it, but I guess somebody might accidentally do it. If they catch you doing those kind of activities, the penalties are even more severe, right? Because you're intentionally doing this. Now, if you do that or you provide false information like that, penalties can be up to $250,000 for individuals and $500,000 for organizations, plus imprisonment. So very serious stuff. So you may ask, Deepak, that's great. So can you please clarify who qualifies as the beneficial owner under the Corporate Transparency Act? Who do we need to report? So very simple. Anybody who has any substantial control over the company, they are beneficial owner. Remember, control. If they have any kind of control, or they own 25% or more of the company, or they receive substantial economic benefit from the assets of the company. So you see, that kind of covers the entire area. So it's not like very specific who goes on that report, So let's just say you are a 10% owner of a company, or even a 1%. Like maybe you are a stockholder in a company with 5% stake in it. But if you have a control, you got to go on the report. If you benefit from that company, substantial benefit, so little small benefit, no big deal. So you kind of have to, there is some gray area here, So fairly large. I mean, if you're receiving a large portion of profit and you don't report yourself, that would be pretty troubling. So keep that in mind. So please, if you are in one of those categories, you got to report yourself. A couple of problems I see with this act is, number one, people who are foreign companies, maybe they have set up a company here in the United States to do business. Rule applies to you as well. So I'm just afraid that many of you guys might not watch this video just in time. So if you have a friend or family member who has a company in the United States, they're doing some business in the United States, please remind them, share this video with them, tell them, because if they don't do this, they can get penalized $500 a day up to $10,000. So come next February, March, they might get a big bill. Now, some of you guys might argue that, hey, Deepak, is it possible that, I didn't know, can I tell IRS that's, I'm sorry, can I do that? Sometimes, sometimes you can. And if the case is legit, then they will probably accept it. But this one, I don't think so. If anything, IRS might realize that, hey, look, we have not been able to get this information out to everyone just in time. And that's why probably good idea to kind of extend the deadline or send some notice or something else. Whether they do it or not, who knows? So don't depend on it. If you have a company already as of last year, then go ahead and file it right away. And if you don't already have a company and you're creating a company this year, then please file it within 90 days. If any of your beneficiary change happens this year, then make sure you do update that report within 90 days. Now, if there's no change and you already filed it once, then you don't have to refile it. So you're good. Those are the key requirement. One of the common questions everybody been asking is, well, that sounds like invasion of privacy. Yeah, for invasion of privacy for criminals, but for most legit people, your information is already out there. I mean, you're already filing your tax return, you're already doing all the right things, so it doesn't hurt you. It just hurts the criminal. So no big deal for you. That information is not public. Nobody's looking at it. It's just like, information that you file with your tax returns and stuff like that. Now, some of you might say, well, can't IRS get hacked or something? Well, I guess anything can happen, but you you're already giving that information to IRS anyway, most of it at least. So I don't think that makes a whole lot of difference there. Okay. Is that everybody has to file it? Is there anyone who doesn't have to file it? So I think that's a good question, because some companies are exempt. So fairly large companies, like a large banks, public companies who have 5 million in gross receipts, and they have like 20 plus full-time employees. Those are big companies, big businesses. Those are exempt. So that's okay. They don't have to report that. And, there are some exempt organizations, like churches, temples, that kind of stuff, non-profits. So they have an option as well, but they have to file a report and let FinCEN know why you're exempt. So it's not automated process. So, just because I said so, don't think that you're exempt. So please, double check it. Make sure, if you need to file it. And you might not have to share the information with them, but you might still have to file it. Couple of things that I'm worried about. I already talked about offshore companies. I already talked about the companies who might not get this information in time. Another one that worries me is, many times people don't really take signing up for LLCs or corporations seriously enough, meaning they will set up a company and forget about it. Like, people set up companies in different states, and just they're sitting there and they go, well, I didn't do any business, I'm just going to let them die. Well, guess what? If you have a company, then you're in trouble, right? Basically, you still have to report this BOI information anyway. And if you don't report it, you're still going to get penalized. So if you have an inactive entity, then what you want to do is completely dissolve it, okay, or activate it. Do something with it. Just don't let it sit there. That's what I'm trying to say. And there's an exemption. So if you're not making any money or whatnot, you can avoid doing that. But do not let that entity sit there hanging on your head. So please do dissolve it. Okay. So what you want to do is send a letter to the IRS and terminate your EIN number and let them know that entity is out of business. Okay, so and what that would do is if you tell them that you dissolve it, so now you're good to go. Now you don't have to worry about that showing up on that FinCEN report because that doesn't exist. But if that EIN number exists in IRS books and you're not filing that report, you can get in trouble. So do you see what I'm trying to say? I hope I'm not confusing you. You have Secretary of State. That's where you file your LLC. That's where you filed your corporation paperwork. So you file that. Now you didn't do anything with it. It's just sitting dormant. Maybe it's even bad state with your state, meaning it's still not even active. Then you had an EIN number that you got from IRS. That EIN number is still active. It didn't die. So that EIN number, IRS goes, and FinCEN does a background check and say, oh, we have this EIN number and there's an LLC and it has not filed the FinCEN report. Let's bill this guy $500 a day. You know, I mean, I can just imagine how many people will get into that trouble next year. So I'm worried about that. That's why I want to bring that to your attention. Make sure if you have any of those kind of entities sitting out there, do the right thing, dissolve them, send a letter to IRS, get rid of that EIN number, so that way you're doing things right moving forward. Some of you guys who are in real estate investing, if you are in real estate investing, there's a possibility that you might have set up a series LLC. Those of you guys who don't know what series LLC is, it's just think of it like a master LLC that owns all bunch of baby LLCs. In that case, your the main LLC can go ahead and file the report, and then basically if the parent LLC is reported and the common ownership is with all the subsidiaries, the common ownership might be used as an explanation to FinCEN to avoid reporting under each LLC. Now, why I'm saying that is because it is possible that IRS might still send you a letter, but if they send you a letter, you can say, look, I reported the parent company and here are all the baby companies, and that's why I didn't report it. So that could be your reason for not doing that. Okay, so I think I covered all the important points that are relevant. It's a big act. So, and there are a lot of exemptions for people. I think about 23, 24 exemptions for not being able to file, or why you don't need to file. But I think they don't really apply to most businesses. I think there's a good 99% probability that you do need to file this information report. So please do that. And if you want to learn more about our services, just go to taxcodeadvisors.com. We are a full service tax firm, tax advisory firm that helps small businesses and individuals. If you want to set up a consultation, you want to learn how we can implement some strategies to help you reduce your taxes, you can go there and set up a consultation appointment right online. We just meet and we discuss and see what strategies we can implement and see how we can help you there. If you're a high net worth individual and you need to figure out some other interesting ways to reduce your taxes, give us a call. If you are thinking about setting up a business, already have a business, you want to expand your business, we can be a good source for you. Maybe you already have a good business and you're looking for some good partners to expand your business. We can be a good source for you. We have, we work with many financial advisors, many alternative investment companies out there. We can introduce you to those. So we try to deliver a lot of value. And as you guys know, all of your work is done here in the United States. So we don't outsource any of your work to overseas like many other tax firms. So if you care about your privacy, you care about getting quality work done, you're looking for some great strategies, then we are a wonderful source to help you out. And like I said, I try to deliver a lot of value. I do almost once a week. I'm on a Zoom meeting. Either I'm helping small business owners or I'm helping everyone build wealth. So those are the two events happening. We have live seminars, we have webinars. We have one live seminar just coming up in Milpitas, California next month in February. We have one coming up in Houston, one in Dallas, one in Austin, probably at the end of February. So we're there, we're out there to meet with you, to help you out, see what we can do. I hope you found this video helpful. And I'm going to stop this recording here. And then all the people who are on the call, I'll start taking their questions and clarify if there is anything I can do to help. So thank you so much for staying with me all this time. Appreciate it.